வணக்கம் மக்களே. Let's say you want $2 million saved for your retirement. How to achieve this? Start investing $583 a month or $7,000 every year starting at the age of 20 and continue investing until your retirement age of 65. If you keep doing this, your investments would have grown to $2 million. What if I say you can get all these $2 million tax-free at the age of 65, that you can go buy whatever you want, either be a yacht, a supercar, or the fancy house? To know how to achieve this, you need to know about something called Roth IRA. Let's look into it. Similar to retirement savings account given by your employers like the 401k and 403b, Roth IRA is an individual retirement account anyone in the United States who has taxable income can open. If you are a single filer for the tax purposes and your modified gross income is less than $146,000, you can contribute $7,000 into this account. However, if you are married and filing jointly and your gross income is less than $230,000 combined, you can contribute $7,000 for the husband and $7,000 for the wife. Roth IRA is similar to a checking or a savings account that you open with any bank. The most common mistake is people put money into this account but they forget that they have to invest this money in that account. You can open a Roth IRA with several vendors starting from traditional banks to online platforms. But I would prefer you guys go with reputable vendors like Vanguard, Fidelity and Charles Schwab. I personally use Fidelity for my own Roth IRA account. When choosing what to invest in this account, I would suggest keep three things in mind: growth, safety, and potential to beat inflation. If you are in your early stage of investment, start with a 100% stock portfolio. But as you graduate towards your retirement, try to move from a 100% stock portfolio to a 60% stock and 40% bond portfolio. The 100% stock portfolio in your initial years will give you the growth, but as you move towards a 60% stock and a 40% bond portfolio, it will give you stability in your retirement age. I would like to keep my investments straightforward and simple. For stocks, I usually go with either index funds or ETFs that track an index fund. For example, you can either go with VOO or VTI. VOO tracks the top 500 companies in the US and VTI tracks the entire US stock market. Whereas for bonds, I usually go with BND, which tracks the index fund that covers the entire bond market in the US. As I said earlier, there is income limit for contributions to these accounts. For single filers, it is less than $146,000 a year, and for people who are married and filing jointly, the combined income should be less than $230,000. But if your income is above this threshold, there is a way you can still contribute to the Roth IRA called the backdoor strategy. In this strategy, you contribute all $7,000 to a traditional IRA first and then convert this traditional IRA to your Roth IRA. Once you do this, you can invest this money in the Roth IRA. After you do this, you will have to file a separate form when you file your taxes. So please discuss this with your CPA before doing such strategies, because you should never go against the IRS. For people who are in the United States on visa, especially like me, can still have a Roth IRA. And when you leave to your home country, you can take this money from the US without taxes at the age of 59 and a half. But discuss with your local tax professionals in each country to know if this money will be taxed in your home country. If you have any further questions about Roth IRA, please leave in the comment below. I'll try to answer to the best of my abilities. More such interesting topics to come in the upcoming videos, so please like and share this video and subscribe to my channel. Let's talk money.